Has the dollar's era as the dominant global currency come to an end? On August 5, the U.S. stock market experienced a staggering $2 trillion decline, which not only hit the U.S. hard, but also led to significant losses for investors worldwide. This dramatic downturn has prompted many to reconsider their investments in the dollar. It appears that 2024 is shaping up to be a year of decline for the dollar, with many experts now predicting an upcoming recession. Adding to the uncertainty, the BRICS nations are actively working to challenge the dollar's supremacy in global trade. With these developments unfolding, the pressing question is, can the dollar withstand these pressures, or are we witnessing the beginning of its decline? Let's find out. August 5, 2024 marked a historically turbulent day in the United States stock market. Within the first hour of trading, over $2 trillion in market value was eradicated, leaving investors and analysts worldwide in a state of confusion and concern as they sought to understand the causes and implications of this dramatic downturn. The magnitude of this crash, combined with economic developments, has resulted in a perfect storm of financial instability. And this news amid BRICS' efforts to cause de-dollarization proves bad luck for the dollar has kicked in. The sudden and severe crash of the U.S. stock market on August 5, 2024 prompts the question, what triggered this unusual event? The immediate cause can be traced to rising concerns about an impending economic slowdown in the United States. This concern was heightened by disappointing job data released just days prior, revealing that the U.S. economy was not generating employment at the expected rate. Coupled with the Federal Reserve's decision to maintain interest rates at a 23-year high, investor confidence was significantly shaken. High interest rates have proven to be a double-edged sword for the U.S. economy. While they are intended to combat inflation, they have also made borrowing more expensive for businesses and consumers alike. This has led to reduced spending and investment, further stifling economic growth. As fears of a recession grew, panic spread across global markets, leading to massive sell-offs in stocks. The impact was immediate and far-reaching. The Dow Jones Industrial Average opened down over 1,000 points, while the S&P 500 and Nasdaq Composite fell by 4.25% and 6%, respectively. The sheer volume of trades triggered automatic halts in trading, but these measures did little to stem the tide of selling. Transitioning from the immediate triggers, it is essential to understand how these domestic economic concerns translated into a global market reaction. The interconnectedness of today's financial systems means that a significant event in one major economy can have ripple effects worldwide. The reverberations of the U.S. stock market crash were felt across the globe, highlighting the interconnected nature of modern financial systems. Japan's stock market was among the hardest hit, with the Nikkei 225 index plummeting by 4,568.02 points, marking a staggering 12% decrease. This drop was the largest single-day decline since 1987, when the index fell by 3,836 points. The severity of the crash highlighted the vulnerability of global markets to shocks originating from the U.S. economy. Similarly, Taiwan's stock market faced its worst loss since 1967, driven by fears of a potential recession in the U.S. The heavy reliance on the U.S. market for exports and economic growth meant that any slowdown in the U.S. could have severe repercussions for Taiwan's economy. The panic among investors led to a massive sell-off, erasing significant market value within hours. The global sell-off was not confined to just Japan and Taiwan. Markets across Europe and Asia experienced sharp declines as well. The FTSE 100 in London fell by 7%, while the DAX in Germany dropped by 8%. In Asia, the Hang Seng Index in Hong Kong and the Shanghai Composite Index in China both saw significant declines. This widespread panic can be attributed to the perception of the U.S. as a bellwether for global economic health. When the U.S. economy shows signs of trouble, it raises concerns about global economic stability. Investors fearing a broader economic downturn tend to pull their investments from riskier assets, leading to widespread market declines. Transitioning from the immediate global impact, it is crucial to examine the underlying factors that have put the US dollar under pressure during this crisis. The US dollar, long considered a pillar of global economic stability, is now under intense scrutiny due to the combined pressures of the stock market crash and the ongoing efforts by BRICS countries to reduce their reliance on the dollar. The BRICS bloc, comprising Brazil, Russia, India, China, and South Africa, has been advocating for a shift away from the dollar-dominated financial system, a movement that has gained momentum in light of the recent U.S. economic troubles. The current crisis has amplified concerns about the dollar's stability. As the U.S. grapples with economic slowdown and high interest rates, the dollar's value has come into question. BRICS countries have seized this opportunity to push for alternative financial systems. Their de-dollarization efforts involve increasing the use of local currencies in trade, developing new payment systems, and establishing a BRICS currency to reduce dependency on the US dollar. China, in particular, has been at the forefront of this movement. With its robust economy and growing influence, China has been promoting the use of the yuan in international trade. The recent stock market crash in the US has bolstered China's argument that the world should not be overly reliant on a single currency, especially one tied to an economy facing significant challenges. So, overall, how is the BRICS nation shaping the future of global finance? Here's a reminder to please like and share the video and subscribe to our channel to watch more videos on Africa's geopolitics, economy, and changing landscape. Let's continue now. The BRICS nations, Brazil, Russia, India, China, and South Africa, are increasingly shaping the future of global finance by challenging the traditional dominance of Western-led financial institutions. Through initiatives like the New Development Bank and the Contingent Reserve Arrangement, BRICS provides alternatives to the World Bank and IMF, aiming to reduce dependency on Western financial systems. The group is also pushing for currency diversification, advocating for the use of local currencies in trade to reduce reliance on the US dollar, and promoting a more multipolar currency system. Additionally, BRICS countries are expanding their influence in global trade, building networks that could reshape trade patterns and challenge Western financial hegemony. They are developing alternative payment systems to bypass Western-dominated systems and have considered expanding their membership to increase their geopolitical and economic reach. Overall, BRICS is promoting a more balanced global order that reflects the economic realities of the 21st century, gradually reshaping the global financial architecture. So, in the end, the August 5, 2024, U.S. stock market crash has highlighted significant economic challenges and global repercussions. With over $2 trillion wiped out in the first hour of trading, the event highlights the potential vulnerabilities of the U.S. economy and the stability of the U.S. dollar. The crisis has had a profound impact on global markets, with countries like Japan and Taiwan experiencing severe losses. The pressures on the U.S. dollar have been exacerbated by the ongoing efforts of BRICS nations to reduce their reliance on the dollar and promote alternative financial systems. The current crisis may accelerate the shift towards these alternatives, as more countries consider diversifying their currency reserves and adopting new payment systems. The Federal Reserve's response, while expected to include interest rate cuts, may be too late to avert a deeper economic downturn. The broader geopolitical and economic uncertainties, including trade tensions and conflicts, further complicate the landscape. An important question here will be, is it officially the decline of the dollar? The question of whether the dollar is officially in decline has become increasingly relevant, particularly in light of recent economic developments. Yes, it is officially noted that the dollar is declining, and this trend was evident even before the recent downturn in stock markets. The dollar's decline became particularly pronounced in July 2024, when it fell against several major global currencies. The DXY index, which measures the dollar's strength against a basket of currencies, recorded a drop of 1.7% during that month. Specifically, the dollar slipped from 1.717 to 1.820 against the euro, and from 160.84 to 150.46 against the Japanese yen. These movements indicate a weakening of the dollar's purchasing power in the global marketplace. This decline is occurring despite the U.S. economy showing signs of resilience throughout 2023. However, a combination of factors is contributing to the dollar's weakening position. One of the key issues is the negative savings rate in the U.S., which has been a growing concern as it suggests that consumers are increasingly relying on credit and depleting their savings to maintain their spending habits. Additionally, there are strong indications that the U.S. economy is heading toward a slowdown. This anticipated economic deceleration is being driven by several factors, including tighter monetary policies implemented by the Federal Reserve to combat inflation and external pressures, such as geopolitical tensions and shifts in global trade dynamics. These factors, combined with the declining value of the dollar, suggest that a recession in 2024 is becoming more likely. Do you think, in this high time, BRICS will find more ways to attack the dollar? Will they successfully introduce their currency as the new global currency? Let us know in the comments section should the dollar be replaced. Do you want to watch more videos like this one? If yes, subscribe to our channel and press the bell icon next to it. We have decided to bring videos on something nobody talks about: African politics, economy, and increasing power. Thanks for watching, and until the next video, stay tuned.
Tell us what you think in the comment section. Like and share the video, and subscribe so that you don't miss any of our African videos. It's the best way to support us.